Hello, my friends. It's Robert Miner with Dynamic Traders Group with a brief video update for our YouTube followers and Twitter subscribers. I haven't done one of these videos in 6 or 7 weeks. It's been quite a while. Been really busy, done a bit of traveling, spent 3 weeks in Italy. Oh, what a fantastic place to visit. And oh my gracious, the food, unbelievable. And the wine too. But I'm going to do a little bit of catch up here. I'm going to look at about 4 markets. I'm going to go through them really fast to show you what I believe is the current position of those markets and potential trade setups. Needless to say, if you like what you learn from this video, check us out at dynamictraders.com and our DT reports. And also be sure and like us and subscribe to us and spread the word so other people will know about these videos. They're very educational. Whatever I teach you in these videos, you can use for any actively traded market in any time frame. So that said, let's get started and take a quick look at the ES, or S&P. Well, this is the weekly ES chart, and something very important happened last week is that the ES made a weekly close above the March 14th weekly close, and that was what we was looking at as a wave A closing low. What does that mean? It's very important. It's called a closing overlap, and it's a very strong signal that this decline is a correction, and it's in a position to have completed the correction. Now, I hope you folks haven't got all wrapped up in recession nonsense and the dramatics of the coming recession, et cetera, et cetera. There is a recession coming. There's always a recession coming. It's a matter of when and recognizing the conditions that precede a recession. Well, those conditions are not in place, as I've been describing to our subscribers in a whole series of reports on recessions. And for the past several weeks in this sharp decline that we've had, when other people have been panicking, as I've continually expressed that this is probably not the beginning of a recession. It's an overreaction to some news events, and more than likely, instead of a bear trend, it's just a correction. Well, that's what the market is telling us as of last week. Of course, everything's about probabilities. I could be wrong, but the market position is clearly telling us that this is a corrective decline and that it's in a position to be complete. That's a really important piece of information to have, at least from my point of view. Here's our daily data for the June contract for the ES. And again, this is what I've been showing our subscribers for the past few weeks, is that if we have a daily close above the March 13th daily close, that's a closing overlap, and it indicates that this decline is a correction and not an impulsive bear trend. And these multiple closes above that level for the past week is a really strong signal, again, that this decline is a correction and it's in a position to be complete. So whenever you believe you understand the position of the market, then you have to identify what can the market do to tell you that's not correct. Well, for right now, first of all, is that the ES is in a position to complete a daily high. The daily momentums are dual look back overbought from where daily highs are made. That's a high that lasts a few days. That's Friday, May 2nd, was a key time factor for a daily reversal. And that was because it was the low to high. So more than likely by early next week, we'll see a temporary high and a decline. The decline should be a correction within a weekly bull trend. However, if the ES should close below 54.40.75, and that's not too far below the market, particularly on the kind of ranges we've had, daily ranges lately. But if the S&P or the ES closes below that level, then that will indicate I'm not correct. This is probably not a completed correction, and that something else is going on. And the something else will probably be a more complex correction, something other than a simple ABC. But we'll address that if that signal is made. For right now, simple trade strategy is if we have any signs that the ES does complete at least a temporary high early next week and it has a corrective decline. And for instance, if the daily momentum cycle makes a cycle and a bull reversal and the ES is not closed below 54.40.75, that'll be a setup for a long trade. If the ES closes below that level, then we'll have a different trade strategy. But for right now, that's how we're looking at the stock indexes. And what it also means longer term is that before too long, well, I shouldn't say before too long, but eventually the ES should continue to advance above the February high. So that's a pretty important piece of information to have. We have the probable outlook, probable trend position. We have the specific signal that voids that probability of a continued bull trend. So we can develop a specific trade strategy from that. By the way, there is a recession coming, pretty nasty one, but it's not likely to begin until later this year or early next year. So hopefully you'll subscribe to our DT reports so you'll be prepared for that. Let's take a look at gold. Well, this is a gold weekly data, and just last week we had a couple important signals with gold. Number one is the weekly momentums finally made a dual look back bear reversal from the overbought zone. That's usually pretty reliable that a weekly high has been complete. Not all the time, but when we have pattern, price, and time position, it's a real wake-up call to have that momentum cycle reversal. Last week, or 2 weeks ago, were two key weekly time factors for a weekly reversal. That was the week ending the 25th. That's the high so far. That week made what's called a price bear reversal. And then this week, it confirmed that reversal with a lower weekly close. So more than likely, a weekly high, that's a high that's going to last several weeks, is complete. And as I described to our subscribers in our big picture reports, it's got a good possibility of being a multi-month high. That said, is that any decline of whatever degree it might be and however long it might last is a correction within a much higher time frame bull trend. And that bull trend should then resume later this year, probably around June or a little bit beyond that, after this correction is complete, if the market does correct as anticipated, and then to a much higher level. So we'll really be focused on that in the weeks ahead of identifying when gold's in a position to have completed a correction. Now, if gold should continue to a new high, if that should happen, I just want you to be aware that the upside should be very limited because it's already hit its price targets. The pattern position is pretty clear to have completed a wave, in this case wave 5 of 3, with the weekly momentums having made bear reversals. So it doesn't have much buying power to continue to the upside. If by chance next week is another lower weekly close, then that will confirm that weekly high, and then sideways to down for at least several weeks, possibly several months. That's how we're looking at gold right now. Well, this is the Euro weekly data, and the Euro has probably just completed a weekly high 2 weeks ago, actually. It just hit the price targets. The weekly momentums were a dual look back overbought, and then this past week they made a bear reversal from the overbought zone. And you can count this as a 5-wave advance up into the high 2 weeks ago. Now, that again is a temporary high. Any decline should be a correction. The Euro, more than likely at least, is in a multi-year bull trend. Not just the next few weeks or the next few months, but it's probably got at least a couple more years to go. Net bullish in the euro, net bearish in the dollar. So for right now, if the euro has not completed that weekly high, any continued upside should be very limited, very similar to the gold position. But what we're focusing on in the next few weeks is identifying when the euro has confirmed a weekly high, and then when it's in a position to complete a corrective low, because then it should have another pretty significant bull trend lasting several months on the upside. So it's really important the longer term to get a handle on the longer term trends with the dollar and the euro, because that affects a lot of businesses. And as I've shown in our big picture reports, for really the last year to 2 years almost, since the latter part of 2022, the dollar is in a multi-year bear trend and the euro is in a multi-year bull trend. Doesn't mean there's not going to be corrections lasting weeks and even months. I mean, look at how long this basically flat correction continued for over a year. But each of those corrections should resolve themselves for the euro for a resumption of the bull trend to new extremes. So here's a Bitcoin weekly data, and we've been looking at this decline since the January high as a potential corrective decline, because it ended up completing in a impulsive fashion, is that more than likely it's not a completed correction. However, as I've explained to our DT Report subscribers, is whenever there's a weekly reversal, we want to participate in weekly trends, those trends that last several weeks. And that's what we got in Bitcoin a few weeks ago. And so from our report recommendation anyway, been long Bitcoin for, I think it's almost 3 weeks, exited half the position last week because it's getting near, I'll show you in a minute, it's getting near a daily top, which might last several days, maybe even a week or two. But any decline should be a correction, because as you can see, the weekly trend is bullish and it's not overbought. So Bitcoin should have another 2 to 3 weeks of net bullish trend. I'm just not so sure anymore that it's going to make a new high above the January high. But I don't have to make that judgment, because it's a weekly bull trend. I participate in that, and if it takes off to a new high, ka-ching, all the better. Let's take a look at the daily data. This is Bitcoin daily data coming off of that April low. And what I'm looking at this is an impulsive advance, and that's an important piece of information, because a correction should not be complete on an impulsive 5-wave trend, and that's what's occurring here in Bitcoin. So I think we're within a day or two of completing what we call a daily high, and then a correction lasting at least several days should follow. It would be a correction to this initial advance. But when that correction is complete, the weekly bull trend should continue to a new high, at least above whatever high is made early next week, if one is as anticipated. So when I look at this, you can see the wave counts on there for you folks that know some basic Elliott Wave. This is the 240-minute data for Bitcoin coming off the April low. It was just this beautiful 1, 2, 3, and a little ABC 4, and here we are in the wave 5 coming up, and more than likely as of the end of Friday, it's wave 5 of 5. So this would indicate potentially a new high early next week, but that would finish off the whole series going back to April 7th, and then there would be a correction that should be greater in time and price than any correction since the April 7th low, and another opportunity to position long. So that's what we're looking at for Bitcoin. Bitcoin is just such a wonderful technical market because, as you know, it has no fundamentals. It's just imagination. So it's just psychology. And so it's just cycles of optimism and pessimism, and they're great to trade. You don't have to trade Bitcoin itself. You can do ETFs if you want, and other vehicles other than straight on Bitcoin. So I think this is just a great example of where Bitcoin's probably near a temporary high, but any decline should be a correction and offer another great opportunity to get on the long side in the days ahead when Bitcoin's in a position to complete the correction. Well, that's it for today, my friends. Check us out at dynamictraders.com and the DT reports. And hopefully, I'll be back on a schedule where every week or two I do one of these video updates, at least for a while. It's going to be a really interesting year, as I think you already know. And it's just begun. So hopefully, I can be a help to you as the year goes on, as well as teach you about trading. That's it for today. Robert Miner, over and out.